Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Wednesday, September 10th, 2008. Well, it was another volatile day on Wall Street, but the long story short, we continue to see these large reversals after a previous day's move. Now, what do I mean by that? Well, Monday we saw the ginormous move up in the markets, right off of that Freddie and Fannie news. Tuesday, we saw the reversal, which was a very bearish indicator out in the market. After yesterday's move, we said in the video last night, and what it was posted yesterday after the bell, that we wouldn't be actually surprised to see a move to the upside the next day, which was today. Sure enough, the market did that, and you saw the Dow moving up about 38 points. The NASDAQ was up about 19, and the S&P was up about 7.5. Now, all these numbers are slightly muted because before the last hour of trading today, the market really was up quite a bit more. But that last hour really took a lot of air out of that balloon, you could say. The Freddie Fannie news from Monday was a big catalyst. Yesterday, the drop was perpetuated by the Lehman news. Today, it seemed to be, again, the Lehman situation, the financials. And one thing I do want to point out today, among some technical key indicators and some key support lines to watch for in this market, is the Goldman Sachs. Goldman Sachs remained very, very weak today, and that is a little bit of a worrisome signal to us. So we're going to go over that today. Also, there's a key turn date we have scheduled for next week that the signals, our proprietary analysis signals, are pointing to. We're going to isolate that more and more over the next couple days, but I just wanted to give everyone a heads up that that will be coming out. As you guys know, our turn signals have almost been dead on over the last 2 years, multiple turn signals over the last couple years. So stay tuned for that, obviously, in the coming videos. Now, let's get right into this market, because obviously there's a lot to discuss. Now, you can see the volatility on this intraday ES U8 September 08 E-mini contract, and it was just a very whippy day, although the size of the move was not as dramatic as what we've seen Monday and Tuesday. So it's a little bit of what you could almost call a consolidation, little up and down movement in the market. And what we can see here is that you see that early sell-off, and this early sell-off basically happened after Lehman came out early, and they weren't scheduled to report earnings till next week. But after the debacle yesterday in the stock price of 45%, they really had to. I mean, you just can't stay silent. A company cannot stay silent when their stock drops by 45% and is down something like 80% in the last year and a half or so. So Lehman comes out, releases earnings. Initially, it sells off. Then all of a sudden, you see a bid come in right here, and the market moves back up to that flat line to positive line in the markets where we start to open. And right here's where you have the open in the markets. Right off of that open, you start to sell, but this really just takes us down a little bit. It looks more dramatic than it is. Really, right here, we're flat on the markets, maybe slightly negative, but it's really a flat market. And at that point, the rally kicks in. And the rally lasts most of the day. And you can see right here a rally that takes us up, consolidation right into key moving averages, another pop, a little sell-off and retest of that support area, and then a blast off to really around that 2:30, 3 o'clock time frame. Now right here you get a little pop in the markets above the 200 moving average on the intraday, another retrace, a double top pop right here, notice the double top, and then at that point you start to see the sell-off come into the markets. Alright, and this was a late day sell-off, and again, it seemed perpetuated by Lehman. Lehman began to sell off, and it actually closed negative on the day after being up as much as 10-15% during the day. And you also saw a lot of the financials dragging the markets down. Technology, which has been weak recently, all of a sudden is strong today, with the NASDAQ being up the most percentage-wise in the market. And the financials all of a sudden show us very weak signals. Now, I mentioned in the beginning of the video Goldman Sachs. Goldman Sachs, very weak all day. It actually tried to rally late in the day on that market rally, and notice how the market was following Goldman up. All right, so here's Goldman Sachs' intraday chart. Notice, let's go back to the ES chart, and you can see here's the rally right here. So here's where Goldman's starting to rally, and finally, once Goldman rallies, it catches a bid. But notice how Goldman sells off, the market sells off. Really, these two are tied together. Alright, and we always talk about that in these videos, how that's one of the key stocks you want to watch. Alright, everyone has different things. We happen to watch Goldman Sachs, especially in this market that's so infiltrated by the financials. Alright, so notice again Goldman selling off late in the day, actually closing down $4 on the day while the index is all closed positive. Now, what's the key here with Goldman, alright? Because Goldman's key support line, this is a very big support line on Goldman, 156. 156 is a very strong support line. It has to be watched. All right, notice how it held today. We talked about this in the chat room even before it got down there. When it was trading up here and it was down, we said watch that 156 level. It came down perfectly, held that 156 level, and rallied back. Now, if this 156 level is broken, that could cause an overall negative impact to the overall markets and should be monitored very, very closely. All right, on the daily chart, you can see, I mean, you can go back right here. This is all the way across this support line across the board. So anywhere from these two areas is going to be very, very good support on Goldman Sachs. Has to be watched. You break below this level, watch out. The markets could take a very big hit off of that. Now, we also not only do we want to focus in on Goldman Sachs and the trading activity, but we also want to look at the SPY daily, okay? The SPY really tells us the key levels. I'll tell you guys the key levels we have on the S&P. Right now, we're looking at 1237 on the upside is a key level. We regain that level on an intraday basis and we close above it. That's 1237 on the S&P. That's a very bullish situation, all right? We closed below there today. We were above it into the close. Notice here, all right? All the way up here, and this is above it. Let me go back to the futures. We can kind of use the futures to note it. Above here, we're trading much above it, but notice the close back below that level, 1237. So 1237 on the upside, should we get above it, that would be a little relief to this market of a technical level. All right. On the downside, 1217 is very, very important support. All right. So let's go back to that daily SPY and flip back to that daily SPY and that 1217 support, which is really coinciding with right here. All right. This is very key support that the market holds. So you break this line, you're going to go back to the lows pretty much, all right? Which is really not that much further down in all fairness. So watch that 1217 level on the downside, 1237 on the upside. Now, volume today was a little lighter in the markets. We saw a little bit of a breather, and as I talked, it seemed like the market was kind of trying to digest these huge moves that it's seen. And I just want to draw your attention to that again. Going back to last Tuesday, which is right here, we gapped up. Remember, that was the day following the holiday where the markets were closed on Monday. And we gapped up huge and then started to sell off right away and we closed negative. Then you had that pause day, then a mega down day, which turned into an up day and a rally day, then a gap up, huge up day on Monday, and then Tuesday's debacle, and then Wednesday's kind of consolidation up move. You've just had these huge moves in the market, and today seemed to be a little bit of time trying to digest that move. Just like a marathon runner in the markets, you got to take a breather. All right, the market's the same way. It's got to take a little break. Right now, we're in the eye of a storm with these Lehman issues and these WAMU. And I don't know if anyone saw Washington Mutual today, but just another ugly day. I mean, this thing, I don't know how it's going to survive, to be honest. It was down 30% today again to $2.32. I don't know. I mean, you know, your guess is as good as mine on this. Unless someone swoops in and picks them up, I can't imagine it continuing because it's almost, you know, it's down to $2.32. How much lower can it go? Pretty much. It has about $2.32 left to go before it's zero. Either way, who knows what's going on there, but you got to be aware of the situation out there in this market. There's now talk of rate cuts again. All right, and that's a negative for the dollar. Right now, the dollar's ignoring it, and the dollar's continuing to stay strong. The UUP is still up at this key resistance line, and I showed this is the UUP chart, which we use as the dollar index. It's an ETF for the dollar. You can see this is a key resistance level on the dollar. We happen to think it's at a near-term resistance, and we'd be a little surprised in the near term if it broke out. We're more likely to figure in for a pullback to the 20 moving average on this, but it could do either one. Right now, we are favoring a pullback on the dollar with that thought of a rate cut. There's a rate cut talk out there now and all this other stuff going on. In addition, we're also looking at oil, which could continue to move and fluctuate here above this 100 level, but there's a small sense that maybe looking into next week at a point, along with our turn date, there may be a pop in oil. Nothing major, but a little bounce coming in. The question is, before that next week, do we see underneath 100? Do we break that 100 level? Do we touch 100? And that's still up in the air as well. So keep that in mind, guys. But let's go back to the SPY charts again, look at the key levels. Here's the SPY, which mirrors that S&P. And again, on the downside right now, and you have to, because we're staying below that 1237, you have to assume that at some point we may test those lows, and we most likely will. Now, whether we hold those or not, that's up in the air, but would not surprise us in the very near term, and I repeat, it would not surprise us in the not-too-distant future, meaning over the next week or so, if we do hit the lows from July right down here. All right, at that point, we'll obviously reevaluate. But just be aware of that because there's a lot of issues in this market. And Lehman is just the obvious one to look at, or Washington Mutual, WM. But, Goldman Sachs is another one. Goldman is not acting well, and that's usually a good indicator for the market. The one positive here is FedEx came out after the bell yesterday, and FedEx, FDX, we can look at that. It was up $3 today. Notice right into the resistance, though, and this is the beauty of trend lines, all right? Obviously, right into that resistance, it closed right below the 200. But FedEx came out yesterday and upped their guidance, I believe. Texas Instruments had better earnings than expected. But the FedEx specifically, you have to realize oil's down from 147 or 145 area to basically $100, which is what we called for, believe it or not. Those of you that have been watching the videos for multiple months know we were dead on that call. But the point here is that it's not that they're doing a lot more business, it's that oil's down from 145 to $100, and they're saving a lot of money, so they're upping their guidance. So it's great news, but is it telling us the economy is strong? No, not really. It's telling us that oil has fallen based on a slowing world economy. All right, so keep that in mind, guys. Also, again, repeat on that SPY, S&P, look for that 1237 level to close above, or the 1217 level to be solid support on the downside. Watch for the new website. It is going to be an amazing website. I hope you all come and join. Swing Trade Alerts chat room. Hopefully we see you then. Have a wonderful evening. We'll touch base with you tomorrow.